Oil prices are falling today as OPEC agreed to keep production cuts in place into next year. Crude oil now sitting at about 57.50 cents a barrel. Jared Blikre is here with more. Jared, investors had been anticipating this extension, but we did see Brent and crude rally ahead of that announcement, and now we see it down 2.7%. What's going on?
Simple case of buy the rumor, sell the news. A lot of this was telegraphed last Thursday and Friday, and especially Saturday when Vladimir Putin met with Prince MBS of Saudi Arabia. They're the two big players, so we knew by Sunday night what was going to happen. We did get a couple surprises. They extended their agreement till March, and so it's going to be a 9-month agreement instead of a 6-month agreement. They're also targeting supply levels from an earlier period, 2010 through 2014. So that means that they're going to have to target cutting an additional 160 million barrels of oil. So this will probably require more production cuts that Saudi Arabia will fill right now, really because of the drop in supply from Iran and Venezuela, which the U.S. is targeting with sanctions. The other members don't have to cut that much, but still Saudi Arabia is going above and beyond their duty right now.
Now, Jared, a conversation we've had a few times, and I don't know how much has changed recently, but like where OPEC stands in the market, right? The importance of OPEC. We all remember 5 years ago when everything OPEC said was a huge deal for the energy markets, but that was just as we were understanding how much shale had changed the supply-demand dynamics. So I guess looking at this agreement, obviously some headline noise around oil prices in the last couple of weeks because of OPEC, but longer term, did they still have control of the oil markets, or is it really about what's happening here in the U.S. shale patch?
No, the short answer is no, because they can affect the marginal price of oil to a certain extent, but as they target higher oil prices, they lose market share to U.S. shale, and U.S. shale is expected to expand throughout the 2030s, at least in the early part of that decade. That's a long time. Plus, you have up-and-coming shale producers around the world. They're going to add to the supply. And so OPEC is becoming less relevant, which is why they signed an additional agreement with Russia and Kazakhstan and Mexico for the first time, and some other nations, to make the OPEC Plus alliance more formalized. But with their dwindling influence, they're just only going to be able to affect the marginal price that much less as time progresses.
And in a world with low rates, right? These oil producers have basically unlimited capital to go and continue to do these investments.
The cost to dig it out of the ground is just getting lower by the week, by the month. It's expected to hit $15 a barrel for Exxon in 2024. That's an incredibly low price with fat margins, not to mention. So the trend is definitely down long-term with crude oil. It depends on the demand picture. I mean, we're talking about 2030 here. Anything can happen with the global economy between now and then, but the world's awash in oil.
Speaking of which, give us the macro picture when you think about gold recent rallying, oil obviously seeing this slow decline, and it was in bear market territory or approaching it last month. Do you think that this looming recession is really going to be a huge surprise to the oil industry?
Well, let's keep into consideration this recession has been looming for the last 2 years, and it's always 1 year off.
Yeah.
So we'll see exactly when it comes, and of course we know it will. The price of gold has largely been a reaction to events at the Federal Reserve, pricing and rate cuts, and also to a certain extent, it is an Armageddon hedge. And when tensions were flaring with Iran, we saw gold react to the upside. I see it as more. I see the limited upside for gold. It's going to take a lot for it to get above $1,500 an ounce, for instance. But crude is a very volatile instrument, and we've seen it confound traders on both the upside and the downside. When it went to $26 a barrel, nobody thought it would go that low. When it recently went to $77 a barrel last year, nobody thought it would go that high. So it's been very unpredictable. But now that it's crossed below $58 a barrel, that was one of my thresholds, as it has over the last hour only, I think it has further downside to go.
Oh, fascinating. Thanks so
Oil,
much,
gold,
Jared.
and Bitcoin. That's Jared.
Exactly. The trifecta. Thanks, Jay.